Good morning, gang. Good morning, good afternoon, good evening, and good night, depending on where you are in the world. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. It's for educational purposes only. Okay, now we've got that out of the way. Let's take a deep dive into the Bitcoin chart, shall we? And take a no bullshit approach like what you guys come for. So, since our last video, we've had another significant pump to the upside, and we've created a new all-time high, which resulted in a bit of a sell-off. A bit of a sell-off to the downside, which caught a lot of people off guard. 15% sell-off in the end within that single daily candle, and we've pretty much recovered the whole thing now. Okay, so what we're going to do today is we're going to talk about some of the trades that we've taken in the group, what I'm looking at next, and also how I've personally managed my longs and my swing trades within this zone so far, and hopefully you guys can learn from this, because there's a lot of fake gurus out there that will teach you really bad things, and that you can hold leverage positions forever and it don't cost you anything, and yada yada yada. And I just want to talk through that, so I want you guys to learn from this. Okay, so I want you to pay close attention. Okay, so first and foremost, let's just discuss what's happened since last week's video. Okay, so let's zoom into a 30-minute chart. Last week's video would have been Thursday, so it would have been around here. Okay, and in the end, all we had was a range. Now, us in the group will call this a range because we prefer a range. However, in Elliott wave terms, this technically was a triangle structure. Okay, and typically speaking, I won't trade triangles. This is, as much as it's a valid technical pattern within Elliott wave theory, as long as you are trading it within Elliott wave theory and you're not just trading made up fluffy patterns that some of the influencers tell you to trade. But I personally won't trade a breakout of a triangle pattern because breakout trading normally goes against you. However, in an up-only market, bulls will get away with bad habits. Okay, so pretty much you've gotten away with bad habits all the way since 25k. Bad habits have eventually paid off. Lower time frame, don't get me wrong, people have been destroyed if you're trying to trade a breakout on the 1 minute chart. But typically speaking, you'll get away with stuff like this. In a bear market, you will not get away with stuff like this. So since then, obviously, we had the pump to the upside. And what do we do? Well, we front run the all-time high. Okay, we front run the all-time high. We had a pullback, and then we came back up on the 1 minute chart. In fact, we'll zoom into the 1 minute chart so you guys can see this. Very clear. Little swing failure pattern. We had a hell of a lot of breakout longs coming in there. And, you know, I do take the piss out of people that are breakout traders. Once again, breakout traders, like I discussed with the triangle there. I do take the piss out of these, because it fascinates me how you can wait the whole time and wait for 69k and then long the all-time high. It fascinates me. And again, this comes down to psychology. You know, you see a pullback like this. You see a pullback like this, and this scares people. Okay, this scares people, and this is where people's mentalities are wrong. So they will see a range. In fact, let's just draw this. Let's see if you can learn from this. They'll see a range. Got some sideways price action within this range. As range progresses to the top of the range with confirmed resistance, people get overly bullish. This is where people get bullish. And then any little poke over here, this is where people start longing. And then what happens? Well, we just destroy those people. And those people then have to close out their long positions, which in turn helps move price down. Now, when you get moves like this, people become bearish. And what they're trying to do is they're trying to short here, okay, into range lows. Or, if it fakes out, the short down here. Again, they're trying to trade the breakout. But in the end, you need to flip your mentality. And again, this is difficult. It's difficult. A lot of people will tell you that this is easy and you just need to do this. Straightforward. At the highs, look for shorts. At the lows, look for longs. And it sounds simple enough, but it doesn't work like that in reality. Okay? It doesn't work like that in reality. And I understand that. And that's why a big portion of our course is about psychology, because it's really difficult to fine-tune that. Technical analysis is easy. It's easy. But managing your emotion is difficult. Okay? So this is all that's happening. This is all that's happening. So we're getting a high. People are getting overexcited and longing. And for us in the group, we're looking for a short trigger. Okay? Now, were we only looking for a short trigger here? No. Because I'm not a LARP, and I'm not going to say that is the only trading plan that we had. We had two trading plans. Number one, we're going to swing fairly pattern, all-time highs, and have scalp short, potentially an intraday, but realistically, even I wasn't expecting it to come this far down. But again, I don't sit here with a crystal ball. The other option was we got no reaction here, and it just moved up. Okay, so you got to be prepared for all outcomes. But what we did see in the time was we saw a low time frame grinding up price action into this, a lot of longs opening, and then we got back down below it. So all these guys that longed up here for the breakout were now trapped, which then, as I just said with that range example, that then gives you the fuel to start moving down. Okay, now I did take a long on the way down, and I got stopped out, and I was basing this again. I updated the guys in real time on this. We took the short, and then I was looking for a long based on another flat pattern, because this is a pattern that we seem to get again and again and again in this kind of market. So I ended up taking a long here. Okay, you can see here, backtest the old range high, 1, 2, 3, 6. Once again, A, B, C in Elliott wave terms. I took a long here, got the bounce, didn't get any follow through, rolled over, stopped me out. Absolutely fine. So I just waited patiently, and then this happened during our Chart and Chill live stream. Okay, now as I said to the guys, I was no interested in trying to catch the absolute bottom. I will wait for a sign of strength. Okay, so all we did was we came down here, we took out all the liquidity from these lows. So anyone that's been long in any of this on the way up, where they're using as their invalidation, well, below this last consolidation. And what did price do? It came back into that consolidation, triggered all these stop losses, flushed out a lot of open interest to reset it, and then we've just meandered back up, with all these people now getting too scared to enter back in. And what will they do? Well, they'll probably enter back in once it gets to all-time high again. This is what you've got to understand. Now, one thing is understanding technical analysis like this. As I said, this is the easy part. Now, the next part that you've got to understand is where's your entry criteria, okay? So where do you want to do business on the chart, and where can you enter if price comes into the area of interest? Well, quite simply, the long that I got in the group was based on a simple market structure change. Now, anyone that's in our group understands that I have 3 methods for entering trades. Okay, I've got 3 different criteria. Okay, each one's completely different. But all we did, zoomed down on the 3-minute chart, came down here. This is the high that caused the low. We came back up, we broke structure, we came back in. Where did we come back into? Well, it was a strong break, a strong buy up, and we just came into that 382. Now we know that 382 comes into play when it's a strong move. Now this was a strong buy back up because this happened relatively quickly. Okay, only a few minutes to get back up here. Came back into the 382, got the bounce, and then we've continued higher. So there's your entry criteria. Now what happens if it came into this zone of interest and there was no entry trigger? Well, quite simply, there's no trade. And that's what happens when you have strict rules, okay? So we've had a few good opportunities within this, okay? We've had the short, we've had the long, and now we're sitting patiently. The beauty of understanding how to trade like this is I can now hold this short. I have taken majority of profits. There's roughly about 25% left in this trade, if that. And I've got a long from this region, which I've taken slightly less profits on, but I still have locked in some profits. And now I don't care if price goes this way or price goes this way. I would prefer it to go this way because I still hold a lot of longs from lower. However, if it starts coming down, it's absolutely fine because I get paid more on this one. And I might get stopped out of this one, or vice versa. Okay, this is the beauty of understanding how to trade these markets. Now, before I get into the talking through our main longs, our swing longs, first and foremost, big shout out to our sponsors over at Prime XBT. Now, Prime are one of the 3 exchanges that we use to trade in our Discord, as you guys will probably know. Now, the beauty of Prime XBT is if you use our link down in the description, you can get up to a $7,000 deposit bonus. And not only can you trade crypto on this platform, but you can also trade Forex, commodities, and stock indices. Okay, now another beauty of these guys is they are also a non-KYC exchange. So if you do live in an area where you struggle with certain KYC requirements, then Prime XBT is an option. So full disclaimer, the link down in the description is an affiliate link. I do get a kickback on your trades of very small amounts, but regardless, if you want to check them out, there you go. Now, moving on. Okay, so let's talk about how we've played this, because I want you guys to learn from this. Now, I normally leave the educational content to the members, but I want to talk through this, okay? I want to talk through some of the longs that we've had, okay? Now, this is started from back here. Now, as you guys know, in the last video, we shared what we were looking for. Once price action was back here, one of the options that we had for a rally, and again, did I know it was going to come all the way up here? No, I didn't, because I'm not a LARP, okay, was price was going to come down into two boxes that we had. One box here and one box here. Again, go watch last week's video. It's at the very beginning of it. And this is where we discussed price came down, price came up, price came down, took the lows, and then we had a rally. Okay, so this was all part of the plan. Now, at the time, obviously, I'm updating the members. Once we come back down here, down to the lows, we ended up coming up, coming back down, taking the lows, a little swing failure pattern. In the end, we got the entry trigger, and that gave us our first long that we were looking at. Now, with this long here, there were two ways that we could have managed this. I could have just held this all the way up here and been an absolute degenerate gambler, not taking any profits, and paid an absolute fortune in funding fees. But for me, that's just not worth it. That's not worth it, especially as of late. Okay, within this period of the chart, the funding fees have gone up significantly. So if you'd not taken profits along the way, then the funding fees likely outpaced what you were making, and you'd have been in quite a negative. So for me, that's not how I will trade longs in a bull market, in an up-only market. Plus, did I know it was going to come this high? No, I didn't. Okay, we could have turned around at several points. Okay, we could have turned around here. We could have turned around here. We could have turned around here. In fact, we could have turned around here, and we could have turned around here. We could have turned around anywhere and made brand new lows, but we didn't. Okay, so how do we manage this then? Okay, how do we manage this? Well, realistically, market structure is king when it comes to this. So this long here, I'm no longer holding from this position. So this technically doesn't exist, because what happened was, once price came up into this consolidation here, the majority of my profits had already gone. I'd already taken the majority of profits off the table. Why? Because I was looking for head shorts in this period, in this area. Okay. Now, what happened was, one of the plans that we had was A, this was going to break down as an expanded flat, or B, if this range held, then we can look for higher prices. Okay. Now, in the end, what happened was, if we zoom into this, once again, if we're looking on a daily chart here. Now, I'm ignoring this wick low because this wick low doesn't exist on all exchanges. So therefore, for me, this is the high that took the low. Once again, I'm pretending this doesn't exist because it only exists on Bybit. Now, once we flipped this and we started changing daily structure back into bullish, then that's a trigger for me then to add back in to this position, which then gave me an average entry because I added in quite heavily. It was roughly around here from memory. Can't find the screenshot, but it is in the Discord, by the way. If you do want to verify this, it's absolutely fine. I added back in. Okay. Now, the next major zone was actually here within this consolidation, this grinding price, but it didn't actually give us anything. Okay. And it continued higher. So what did I do? Well, I skimmed more profits and added back in. And that's how you do it. You take the profits and you look to add back in. You don't hold something, especially on leverage. Spot's absolutely fine. Told the guys when I bought spot was back here. Guys know I'm holding spot because you don't pay anything on spot. You don't pay any funding fees on spot. You can hold that. It doesn't cost you a penny. Keep it off exchange, keep it safe, and then slowly sell it as you go up. Now, there's a full strategy for that on the website, by the way. But leverage position's different because it costs you. It's fine for shorts. You guys know I had a short from up here and the harmonic pattern that we had at the time, and we held that the majority of the way down. Okay. Now, when you're in a bear market, typically speaking, you're getting paid to hold those shorts. Same with the bull market. Shorts, the funding fee is typically speaking high, so you get paid to hold shorts. But when you're in a up-only market, longs you're paying for. So therefore, you're much better taking your profits, adding back in. Taking your profits, adding back in. Okay, so right now I'm still holding a position from here, which is roughly around 35k. I've got a position from here around 40k, and I've still got that position from the crash, shall we say, in inverted commas, okay, from this position here, 62, 160. Okay, that's the beauty of it. All of them have had profits taken, and I'll be looking to add back into these depending on what happens next, because we take profits as we go. Okay, hopefully you've learned something out of that. It's a little bit different for spot. Now, once again, I've got full strategies for taking profits. We've got a full live stream, in fact, 5 live streams for entering and managing trades, including profit taking. Okay, and that's for spot and leverage positions. So obviously, if you want to learn that, then first and foremost, come over to our website, spitfiretraders.com. As you guys can see, we've had a bit of a facelift. Okay, and if you do want to join us, then first and foremost, you can check out what we do. We've got the daily live streams, we've got the training modules. Okay, all the training modules here, by the way, well, categories, there's many modules under each one. You can see all that. Okay, we've got free tools, we've got Excel charts, templates, we've got indicators, we've got Fibonacci settings, we've got everything on here, and then obviously we've got our community as well. Now, big shout out to the community, because the community have been absolutely printing recently. Okay, longs, shorts, with trend, against trend, altcoins, forex, gold. You know, full respect to the guys recently. They've been absolutely smashing it, and that's because they've studied the content. Now, once again, if you want to join us, get access to my trading plans as well as all the educational content. Join tab, it'll cost you 79 Great British Pounds for a month. Okay, if you want to stay, great, keep your subscription. If you don't want to stay because it's not for you, too technical, absolutely fine. Trading's not for everyone. Okay, trading is not for everyone. The only people I want to join the group are the people that are genuinely serious about doing this. Okay, if you just want to gamble and risk a few grand on some altcoin pumps, then this is not for you. Likely you're just going to lose money in the long run. Okay, but if you want to take it seriously, come check us out and see the content for yourself. Okay, right. So what's next? What's next? Well, first and foremost, let's talk upside. Okay, let's talk upside first, because we're still bullish postured. We've lost no structure. Daily is still pointing up. So first and foremost, we've got the new all-time high. Okay, so the same situation goes again. Do we grind up? Do we poke above, get back below, and give us a short setup? It's possible. It's possible. It's one option. Once again, I don't know if it's going to do this or if it's just going to go straight up, but we've got to be prepared. So if we get an option for another short trip, great, we'll have a look. Now, if this doesn't happen, then realistically, I'm going to be looking up higher into the 70s. Okay. Now, this is based on Elliott wave counts, both a bullish and a bearish Elliott wave count, coming up between $73,000 and $77,000. So that'd be the next sticky zone above us. Okay, is it a major sticky zone? Well, we are in blue sky territory. However, when it comes to fib extensions, we do have a major one there. Now, what happens if we don't come up and we just roll over? Okay, now once again, we just zoom out. 4-hour chart. Here we go. Let's have a look at this 4-hour chart, and I'm just going to show you the same thing as I showed you before. Now, this is the major low to the major high. Okay, so first and foremost, what we're going to do is we're going to throw on some volume, because as you guys know, it's the best form of analysis. On top of that, we're going to do Fibonacci from the low up to the high, because we're looking for confluence. Okay, we're looking for confluence. So what we can see here is we've already had this flush down into this high volume node here. So if we are to come back down and take out this, then we can start looking at lower prices. Now, we do have the 382 down here. Now, we do have some volume, but this for me is not the strongest of levels. There's not much volume. Where's the bulk of the volume? Here. Okay, similar to this high volume, well, this is where the point of control is. You can see here we've just got some volume just underneath it as well. So if we are to roll over, then I will be looking into this zone here. Now, within this zone, do you get a sign of strength? Do you get the entry criteria, yes or no? If no, sit out. If yes, take the damn trade. Okay. Now, if this doesn't give us anything, and this just goes down lower, then we'll start looking back down here. Okay. Next major high volume node. Now, we can also do one step further and take this back and incorporate all this range, and you'll see this a little bit clearer. Now, this is now a point of control. So this is the point of control that caused the whole move to the upside. So if we do come down and we don't get any reaction at the golden pocket / value area high / high volume node, then we start looking back down towards this 886 and this big point of control. We start to lose that. We're starting to look at lower prices. But for now, as long as we are maintaining this uptrend, still creating high highs and high lows, there's no need to get overly bearish. Don't get me wrong, at some point the trend will end and people will get destroyed if you've not taken profits because you're a degenerate. However, for now, trend following is the easiest strategy. It's this type of market where it's very easy to make money. However, if you are a technical trader, the difficulty lies in your own head because you're always looking for people to be caught off guard every moment, and you're always looking for that full-on reversal. But the trend still remains, okay? So while all high time frames, daily, 3-day, weekly, monthly, all points up, trade the trend. Eventually it comes to an end and it turns around and then we start looking for shorts again. Absolutely fine. But for now, longs are still in play. Hopefully you've learned something out of today's video. Sorry it's a bit long. Hopefully if you learned something. If you have, let us know down in the comments. I do read all your comments, by the way, and I try to reply to every single one of you. If you're not subscribed, consider subscribing. And until next time, gang, as you were, bye-bye.